Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. An absolute deluge of data in the US yesterday, and everyone's spinning it as, well, fourth quarter GDP wasn't as bad as we thought, therefore a soft landing for the US. And the Fed can still reduce 25-point rate hikes because the PCA inflation number fell as well. The PCA inflation number is still way too high, including the core number, and this is while gasoline prices at the pump are beginning to rise yet again in the United States, obviously due to rising global oil prices as the energy race, if you like, continues apace. A lot of economic data out, but I don't think you should miss the point that the Chicago National Fed activity index came in serious contraction again. So that's the overall economic indicator in contraction. We already know services are in contraction and probably manufacturing. What was particularly damaging, I thought, on the day to the interest rate outlook that many have of a slowing to 25 points was that durable goods leapt higher, 5.6%. So that was a good number. The initial jobless claims was a good number. These are numbers that will pressure the Federal Reserve to continue to hike, I believe, at 50-point increments for the next two meetings and 3 or 4 meetings, which would blow away most of the market sentiment forecasts these days, if the global oil price continues to rise. That will see skyrocketing gasoline prices again, and inflation is really quite firm on the services front. So if that price of oil begins to rise again, you'll quickly see it in the inflation data. Particularly damaging on the economic front was on the housing sector. New home prices were down around 30% from their peaks. A little bit of bounce at the moment, but down 30% from their peaks. And building permits are also down 30% from their peak and declining further. So it wasn't all great news on the fourth quarter GDP. The more recent data is pointing to serious concern about the US economy. So I still see a weakening economy with the Federal Reserve still desiring to raise rates, which could mean the US dollar is a little bit bottomish here, and it could mean equities are a little bit toppish here. Markets always fall when people least expect them, and the coming week could be one of those periods. Thanks very much. Have a great day. Clifford Bennett, Chief Economist, ACY Securities.